Hello everyone. First strategy, trend line breakout. We are on the Forex market with a 5-minute time frame, and you can see that a very strong uptrend has formed, and we have a trend line here that we're going to use for this very simple trading strategy. First, to draw your trend line correctly, you need to take into account both the candlestick bodies and the candlestick wicks. In general, your trend line should have several touch points, and you can see here that we're going to have quite a few. The second one here, a small one here, the price comes to the trend line, again here, once more here, and finally, here, we'll have a bullish breakout of the trend line. This trend line is very well drawn because there are several touch points. You need at least 2 or 3. Here, you have 6. As you can see, what we're interested in is this trend line breakout area so we can take buy trades in the direction of the uptrend. But let's go back a bit here and imagine that you've just arrived on the market after this huge rise or during this huge rise. You'll have to be patient because here, it wouldn't be very smart to buy. We're going to wait for the market to make a correction. By making this correction, it will establish some resistance levels here. From that point on, here, you can draw the trend line when you see the market rejecting prices downward. You understand that it's going to correct for a while before potentially heading back up to resume the strong upward trend. So, as long as the market is moving below the trend line, you do nothing. What you want is to really wait for a breakout above the trend line so you can ride the upward move and make money by buying. We are on the 5-minute time frame, so it will take a few hours before the market finally breaks out. And as you can see, the market will then come back for a precise retest of the trend line. So we'll be able to buy very confidently when this small resistance here is broken. Let me explain. The market breaks out right here. Then you have the retest, but to avoid a false breakout of the trend line, for example, if the market does this, then moves back inside the trend line and makes a stronger downward correction. You can see that this high almost breaks the previous highs, but this one here definitely confirms that we're back in a bullish market because the market starts making higher highs and higher lows, which is simply the definition of an uptrend. So, you have all the confirmations you need to buy confidently at the close of this 5-minute candle. You place your stop loss below the Maribozu because we consider that if the market, after this bullish impulsive candle, comes back down and makes a new low here, lower than the previous point, it will mean that the uptrend isn't resuming and that the decline will continue. To set your target, quite simply, you're going to use the previous highs of the market. You can see that at this spot, the market is under a very strong price resistance because there are sellers. So, we consider that if the market starts rising again, the first major target will be the previous highs. And there you have your take profit, since after that, it will simply go up and head right towards the previous prices, which will give you your target. You always have to keep in mind that we're following the previous trend, so in this case, upward, and that with the break of the trend line, we're going to analyze the candlesticks to get the technical analysis. The price action, which will simply confirm the bullish liquidity for us so we can take a safe and profitable trade. In terms of money management, you risk a maximum of 2% of your total capital on your stop loss. You try to have a risk-reward ratio of at least 2 to 1. And in this way, you have good management of your trading capital. Second strategy, we're tackling RSI divergence. It's a very simple and also very powerful strategy. As you can see, we have the RSI at the bottom. As for the settings, I don't set it to 7 periods or 14 periods. I set it to 21 periods because I find it's much more accurate that way. You can also see that we have the yellow zone at 50% on the RSI, which is very important for trend following or for trading trend reversals. Overall, when the market is below this line, it's bearish. When the market is above this line, it's bullish. It's not quite that simple, but it's a very basic concept to understand. And what we're interested in are divergences. You can see here that the market has a high point, then a second high point that's higher than the previous one. However, on the RSI, we have conflicting information. We have a high point here that matches this one, and another high point here that corresponds to this high. You can see that the market is going up on the chart with the price action and candlesticks, but on the RSI, it's going down. This is what's called a bearish divergence on the RSI. The market goes up, the RSI goes down. This often signals a weakening trend or even a complete trend reversal. Here, what we're going to do is use the 50% zone to be able to sell. Since the divergence is bearish, we're going to look for selling opportunities. And when the RSI breaks below the 50% mark, we'll start selling, looking for signals in the patterns and the price action with the candlesticks. We can see that the market is forming a trend line here, which it bounces off of each time until it eventually breaks. And you can see that the trend line break here matches exactly with the break below the 50% level on the RSI. So, with the bearish divergence, we move from a bullish market, since it's above the 50% level, to a bearish market with the break of the trend line, the bearish divergence, and the break below the 50% mark on the RSI. So, the entry price is exactly here. You can see that the market is going to bounce, retest the trend line, and finally make the bearish move that we're going to trade. You set a target at the bottom of the zone, because that's the price area the market has previously worked on. It's the price zone where the market, look, created a huge support that sent prices back up every time. So, we expect this price zone to act as a barrier, and that's why it's our first target. And for the stop loss, it's set above the last high point, which is right here. So for this trade, you have a proper risk-reward ratio and a relatively safe chart setup to make money using the RSI divergence strategy. You can look at your charts. There are plenty of divergences. Here, we're on the 5-minute chart, and the higher you go in time frames, the stronger the divergences become. So have fun spotting them and working with them. You'll see it's a really effective and powerful strategy. The third strategy is a 100% price action strategy. There are no technical indicators involved. We're just going to follow the trend and enter long positions at price zones at key strategic points to make money. As you can see, we've had a very bullish move. When you want to trade a trend, the first thing you need to do is wait for the trend to actually start. Here, the start of the trend is marked by this huge bullish candle. And then, you'll see that the market will set up chart patterns and give us very important signals about resistances, about price zones that need to be broken to resume the direction of the previous trend. You can see that here, we have a first buying opportunity because after the market has moved around for a while within this price channel, it decides to break out right here. As with the previous strategies, you need to be patient. So, during this whole period of stagnation, even though there are strategies to buy at every low point, we prefer to wait in order to have the safest possible strategy once again. So, we're going to wait for the breakout of this price zone that the market has established. That will give us a strong signal on gold on the 15-minute chart. You can see that we have the breakout, the retest, and then the market starts its upward move, which is what we're looking to trade. Once you have the breakout of the resistance, you can enter a first buy position here, because if you switch down to the 5-minute chart, you will definitely see an engulfing pattern or some price action that lets you enter earlier. There's a second, much safer entry if you want to stay on the 15-minute chart, and that's this one, simply because the market will break its previous high and break through the mini resistance it had set up. So, you have two buying opportunities to catch this move in the direction of the previous uptrend. Depending on where you enter, the stop loss, in any case, should be placed below the resistance that has now become support, because if the price falls back below, that's a very bad sign and the market will head south again. You can see here a third buying opportunity. This one is more complicated to take for a beginner trader. You just need to use the Fibonacci retracements, take the lowest point at the very start of this trend, go up to the highest point, and you can actually see that the market will almost bounce right on the 38.2% Fibonacci retracement zone. And it's a very, very important zone, closely watched, as of the 50% and the 68% levels. This Fibonacci level acts as support for the market, for the prices. So here, you have a third buying opportunity. You can also see it in the price action, because you have a series of dojis. Then you have a bullish engulfing pattern, and finally, you get the big impulsive candle that clearly confirms the rebound on the 38.2% Fibonacci level. You can easily enter here, with a stop loss below the impulsive candle. And here, there's a lot of upside potential. For TP1, you'll target this price zone, and for TP2, the previous highs. And you can see that the market is going to give you both price zones. So this is a beautiful trade, a bit more technical, because in real time, when you see this, you might think the market is reversing downward since it has broken through all the previous highs and all the previous lows. The move is still a bit violent, but when you see the market calming down, losing steam, making smaller and smaller candles, and then showing bullish price action, well, with Fibonacci, you can enter with confidence.